Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Anthony C., Cindy W., Thomas H., at TDG_13, and Mark A. Returning to the program today is Wayne Heili. Wayne is the managing director and CEO at Peninsula Energy, a U.S. ISR focused restart stage uranium business with its Lance projects in northeast Wyoming, of which right now is in the process of restart operations this year. The Lance project consists of 3 deposit areas: the current Ross production area, Kendrick, and Barber. The company is listed on the Australian Securities Exchange under the symbol PEN, and also on the US OTC markets under the symbol PENMF. Wayne, welcome back to the program.
Thank you, Andrew. It's great to be joining you again.
Yeah, always a pleasure, Wayne. Good to chat, and hope the springtime is potentially perking up there in Casper, and everything's good in Wyoming.
Your timing is incredible. We had the mother of all spring snowstorms this week, and Casper's been shut down for the last 3 days. But fortunately for the company, the location of the site is about 3 hours away from Casper, and the site did not enjoy the level of snow that Casper did. And we had a pretty normal week out at the site while Casper was shut down. Anyways, thanks for asking.
That's a positive. The site's obviously quite a distance away there from Casper, and the weather, as you and I know, in living in these types of regions, can be quite different in different areas. And snowfall accumulates in some places and not so much in other places, right?
That's right. And it's been an interesting winter this year, and presents challenges for companies that are trying to accomplish construction and other works. But all in all, yeah, an incredible winter in Wyoming. Lots of snow, lots of moisture, and still our team, which I hold very high respect for, has dug in and accomplished a great deal throughout a very challenging set of circumstances. One of the roughest winters we've had in the region in a long, long time.
I'll just add too that people that live in this region and the departments and agencies that run things there tend to be a little bit more capable, if you will, of dealing with extreme weather versus major urban areas. So that's always an interesting piece too.
It is, but you're right. I mean, Wyoming is accustomed to having winter weather. It's just we dig out and we move on. You don't see the reporting of the winters that happen in Wyoming like you do in the big urban areas. Maybe it's just not a matter of interest for the East Coast or the West Coast, but a foot of snow for them is a huge deal. Um, just reflecting, we had about 3 foot of snow in the last couple of days in Casper, which is why it actually set records for the largest snowstorm on record, and the most snow that fell in one day period. So but again, out at the site, nothing like that. We were probably 8 inches, 10 inches, and that's a very normal snowstorm in Wyoming.
Good points. And, folks from urban centers should be concerned about what happens out here because last I checked, there's some base load energy in the form of coal coming to them. There's also some pretty important minerals that are coming out of the ground in your state. And I think that should be important to anybody who lives in a city because all the components in that city are, well, being dug out of the ground.
That's right. Well, one thing I think you can rest assured of is the people in Wyoming will cowboy up and get the job done for you.
Yeah. Well, how about we kick it off here with getting your take on the uranium market conditions here? Equities in the dumpster, and I'll throw you in there too, Wayne. I'll right along with the Peninsula equity as well in the dumpster, among all the others as well. But things are looking quite constructive despite the broad market still having its way with many sectors, including uranium. What are your thoughts at this point?
I think the global market is poised for substantial growth for uranium. It's really supported by U.S., European, and Asian government policies with respect to the development of nuclear generation and capacity. Investors know that. We know that. There's a structural deficit in the uranium market. That deficit this year, 2023, is projected to be 35 million pounds. Again, I like to take trade text projections. I think that they're a very solid analysis outfit. They have 2023 Western supply at about 145 million pounds. That's primary production of 125 and secondary production of about 20. And they have demand looking at about 175 million. So again, 2023 structural deficit 30 million pounds. That it's been like that year in, year out. This is structural, and it's not going to go away anytime soon. Rather, the deficit widens as time goes on. You see the significant drawdown of available inventories has been occurring over the last couple of years to meet this structural deficit, but that can't go forever. And what that means for uranium producers and securities is really that we have the opportunity, if we look forward and we prepare for it, new sources of uranium from mid and large scale producers are needed. They're needed now, and now is the time to get started on production. There's going to be a big focus on Western supply, and Peninsula is working to help meet the needs of the market going forward. So our investors, they're looking at the energy sector and uranium in particular, and you're looking for good financial returns, and you're saying, how does this structural deficit, this very easy to see market opportunity, how can it continually not be translating into good financial returns for the uranium producers, the uranium developers, and the explorers? It's just simply that we continue to face financial market headwinds, like inflation, like supply chain issues. And until the global markets heal from their current state, the uranium producers, the more speculative of the uranium stocks are going to continue to be pulled down with the larger market.
Yeah, that's good stuff, Wayne. I appreciate you covering off some of your thoughts on this. Very constructive in the sector. Let's move on here. Let's get right into restart operations. Why don't you tell us what's happening on the ground?
Well, here we are at the beginning of the second quarter of 2023, and the company spent really, the whole of the first quarter preparing our existing production plant and wellfield facilities for low pH in situ recovery operations. Peninsula, since the last time we spoke, has made the production decision to return the project to production. That decision was made late in calendar year 2022. And of course, just a refresher for the listeners who are not so familiar with our company, Peninsula is 100% owner of the Lance projects in the state of Wyoming. It's a premier uranium production jurisdiction. And Lance holds one of the largest uranium resources in the United States. Peninsula anticipates a long and successful run of uranium production, and we're working right now to get that uranium production up and going. The Lance projects are an established project which first produced in 2016 and was idled for a period of time. But again, we're restarting, and we have a very short time frame for restart. We're scheduled to have commercial production operating by mid calendar year 2023. We'll be using the low pH in situ recovery method, which is new for the United States uranium industry, not new for the world. And longer term, with the large resource that we already have, over 50 million pounds, we see significant growth potential on our resource in the Kendrick and Barber areas that you referred to in your introduction. So, like I said, today we're facing the challenge and the excitement of starting up a project, but we when we look to the long term, to the constructive markets and the opportunities, the long term opportunity that the Lance projects present, we're really excited about the future.
Let's talk about some of the things you mentioned earlier. Obviously, we know supply chains have been very difficult, lead time, procurement, all of this has been a cluster, and cost escalations. The inflation factor's always, of course, been there to some degree or another, but definitely cost escalations are a bigger concern for me because of these tight supply chains that we've seen. And some of these costs are just not going to go down. They're not going to go down. They're here to stay. There might be some fluctuations here and there that make it look positive, but in general, I like to use the gold sector analogy here that the 2000 US dollar gold price right now, well, people get excited when it's 2,500 an ounce now after escalations that have been factored in. You've seen that in the gold sector so bad, whether it's your new project developments and watching the capex on those swell by 35%, literally in the course of a few months. 2,500 an ounce, now it starts to look like the cash flows are really stacking. Of course, I'm leaving out a few good quality majors that actually have very good cost profiles, even in light of cost escalations. But let's come back to Lance here. Sorry to digress slightly.
No
Talk
worries.
about some of the challenges you guys are seeing there right now on the ground. There was delays that have occurred already. Some of that's beyond the control of you guys. You guys obviously are making a best effort to make sure that the procurement is done early as possible, but there are things that do come up. But talk about some of those challenges. And then do you see any other challenges, Wayne, that will push off, steady state operations further? Or perhaps maybe there's some tasks that you guys can handle internally that regain some of the schedule losses. Talk about that and some of the issues.
Certainly. Well, first and foremost, I don't think the market appreciates how hard it is putting a new project into production, or even a brownfields project back into production in this environment. Um, we see challenges on supply chain side. We certainly are facing inflationary pressures. But when you look at even any global project, transportation is going to have a big bite. And it's getting harder and harder to move uranium around the world. In the middle of March, we put out a press release and we shared that yes, we've had a few setbacks in our plan. Items that we ordered late last year that we knew had long lead time. We were up ahead of things and ordering so that we would have parts at the beginning of 2023. Some of those parts, believe it or not, some of that equipment has still not arrived at our site. We're expecting it soon, and we're prepared to install it as soon as it arrives. But without key pieces that we anticipated a long time ago would be long lead time items, but then the time frames just keep extending. You call your vendors and they say, just don't have it. I don't have the steel. I don't have the materials that I need to build the piece. And as soon as I get them, you're top on my list, right? But that doesn't get us where we need to be. We need certain pieces and parts to move forward. That said, it looks good now. A lot has moved forward since that press release. We certainly are in a good position to be in commercial production by mid-year this year. And that means that we'll be ramping up in the course of this current quarter. It's very exciting. Uh, Capital expenditures, you asked about that, and I'd like to say, in our press release from mid-March, we indicated that the company is very closely controlling our capital expenditures, and the project transformation, the capital costs that we estimated about $8.5 million, $8.4 million in our DFS from mid 2022 is still a good number. That's great news. Despite inflationary pressures, some cost overruns, we see some victories too. We see some areas where we've been able to identify some savings and keep the project on track capital wise. From the beginning to now, we're still saying, we're still seeing that the overall capital expenditures of about $8.5 million to put the project up and running again are holding true. So that's really good news for the shareholders. Time has slipped, but the money has come in pretty well as expected.
When you say commercial production mid-year, I want to just tie that with another question here, as to what your expectations would be on production levels this time next year. So, let's call it second quarter or April 2024. Talk about what commercial production would mean for you roughly. I know you can't give exact numbers and you can forecast them, but it's impossible to be exact. But maybe you can talk about what mid-year means 2023, and then also what second quarter 2024 could mean for the project. And from a technical standpoint and a processing standpoint, how is the processing methodology going? How's things going on that front?
So, our ramp up plans for the project really initially have been that we would go back into some of the older well fields, which have been previously worked with the alkaline chemistry, and do some additional recovery using the more effective and really better, higher recovery process of low pH. Um, as as with any project, we need to replace old well fields with new well fields. And when the new well fields are available, they haven't been mined previously, and they generally come on strong. So while we're losing some time here, where we would be working in the older well fields, we've continued to develop the new well fields, and the well field development aspect is on track. And what that means is that 2024, where we anticipated having mine unit 3, a new well field ready for production, that's still true. That's on track, and we expect that when we have mine unit 3 up and running, it can help us fill our current plant capacity. We can probably be running at a sustainable rate near 750,000, 800,000 pounds per year in a year from now with mine unit 3 running. So we're losing some time where we would be working in some of the less productive well fields, but we're not losing time where we were going to be working in the more productive future well fields. So that's kind of an exciting aspect for me. I see 2024 as a very strong production year. With our facilities currently nameplate capacity around 800,000 pounds per year, I think we can be filling that nameplate capacity uh, in the middle of next year.
I appreciate the points on that and where you think this will be next year. Let's just discuss just the stage two part of this, Wayne, and when you guys would be at a point where you believe that stage two expansion would be reasonable to undertake. With that, let me just ask you, because this is obviously production, surrounding production, it surrounds cash flows, it really surrounds maybe the pricing and further term contracting that might be done, which obviously would be more attractive at higher prices. But what do you think you need to underpin that stage two expansion, Wayne, in terms of what types of prices would you look for, or a price range for potential term contracting there to underpin that expansion? Maybe a certain cash flow off of the production on stage one that you're looking for, just putting those pieces together to really pull the trigger on a stage two expansion. Why don't you talk about that?
Certainly, and for the benefit of your listeners, let me just help you define what a stage 2 expansion looks like for Peninsula. Again, today we have a plant facility that is capable of producing or generating up to about 800,000 pounds of resins, or of uranium loaded on resins, and we rely on a third party um, company to process our resins and to produce the yellow cake. For us, stage 2 expansion is to expand our plant facilities to become fully independent, which is not a technical challenge. It's just a capital investment. And then to really expand our production capacity at the Ross facility from the 800,000 pound annual rate that we can produce today up to about 2 million pounds per year. That's what we've regarded as stage 2. So stage 2 is a capital investment. What would support a stage 2 capital investment is certainly prices with a 6 hanging on the front, $60 or better. Um, our contract book today, when we look at our base price escalated contracts, that expectation is already being met with numbers that are, averaging around $60 a pound from our contract book. We have a very good contract book, but our contract book doesn't require us to go to stage two today. We have peak years in our contract book that may be three-quarters of our current capacity. We can comfortably produce within our current capacity for our current contracts. So we would look to have new contracts supporting a stage two decision to bring the project to 2 million pounds per year, which I believe is the direction that the market's going to take for us. I think the market will be supportive of that in the second half of this year. I think we've looked at a uranium market, spot market, that's built a solid foundation around $50 a pound now. That seems to be the bottom number. It's been stable in the 50s, and it's due to step up. Again, the available inventories in the market for trading are very thin. Anytime that new investment comes into the uranium space and people are acquiring uranium, there's really only one direction for uranium prices to go from where they are today, and that's to move from 50 towards 60. So I think the tailwinds in the market are going to support a stage two decision, really quickly after we get to stage one full capacity.
Appreciate you covering that off, because that's always a concern for investors as to, hey, how does this get financed, underpinned with cash flows, underpinned with term contracts at higher prices? At this point, 65 incentive price is now much higher than that, giving global events, supply chain issues, escalations, all the other stuff we already covered. Makes a lot of sense there, and to be able to fill that additional expansion capacity here. And I think you'll be in a very good position. Should this be very close to nameplate mid next year, I think that'll be a good reinforcing position for folks to get on board with expansion. Sticking on contracting for a moment, can you come back and just cover off the existing contract book a bit in terms of give us some details on how you see the current contract book, maybe on a percentage filled basis, and what else you would look to do with that remaining capacity that maybe is uncommitted? New contract home, which we obviously covered, which is attractive, or maybe it finds its way into the spot market if it's a small volume of some kind that you think is attractive to leave open to spot. But talk about that contract book and the leverage you guys have to either higher term contract prices and also higher spot prices.
Andrew, we have a really good and flexible contract book. We have sales now, committed sales of over 5 million pounds, 5.25 million pounds, and that contract book extends out to the year 2033. For the next decade, 10 years, we're delivering over 5 million pounds into our contract book. If you average it, you'd say we have 500,000 pounds a year committed to contracts. That's pretty simplistic, but not too far from the truth. So, with a current plant capacity of about 800,000 pounds, having a 500,000 pounds a year is a very comfortable position to be in. We've had some changes in our contract book in the first quarter, where we announced that one of our long-standing customers exercised some options, which means that now what they've done is move pounds from their option to electing that option, and made them firmly committed for us. We're happy about that. We also added some additional pounds into the relationship with that customer, so that we've extended the life of that contract beyond the optional pounds. Our pricing structures as a whole, I think people who like risk mitigation and like to know that we're not tied up in fixed prices all the way. We have a portion of our contract book which is structured with base price escalated contracts. Those base price escalated contracts are projected to yield about $60 a pound for us. And we have a portion of our contract book that's market based, which means that when the market goes up, we see higher revenues from the pounds that are delivered into the market-based contracts. If the market goes down, we would subsequently see lower prices. But our market-based contracts are tied to floors, or have floors and ceilings tied to them to protect us and to protect our customer. The floors on our market, the lowest floor on our market-based contracts is 45, and the highest ceiling is 80. I've seen, comments that investors want to know that we're not all tied up in contracts. We do have, 60, 75% of our current production capacity committed to contracts. That's good business. But those contracts are some fixed price or base price escalated and some market priced. So that too is good practice. If the price goes up, we'll see the improvement. When inflation occurs, some of the escalation factors are tied to inflation. So high inflation rates mean faster escalation on our contracts. A well-constructed contract book supports a company, and our contract book has supported us over the past several years. We've been delivering uranium to customers since 2016 every year. People fail to recognize that Peninsula has been generating revenues year in, year out, even though we're not always producing uranium.
Yeah, good additional color for the audience to take in there. So let's cover off another subject here. Assuming that there is a stage two movement in 2024, Wayne, and as part of additional access to the markets and liquidity seeking that's going to happen here as we continue to move through the cycle, would you be considering further listing upgrades in North America as the company progresses on its goals and objectives, or do you think there's nothing further there, in terms of maybe NYSE Amex listing or possibly some listing in Canada like TSX? What are your thoughts on that additional listing to gain further exposure to the North American capital markets, which obviously the U.S. is by far the biggest one?
Yeah, for a long time we've talked about as a company the opportunities that the North American markets present to us, be it Canadian or U.S. Our board today believes that the time is right to move forward with that, and we're taking quite a few steps towards that North American listing. That's something that could happen this year, very, very, very possibly, and for all the reasons that you state. The North American markets are very supportive of North American and Western based uranium producers. The Aussie market, the Australian market has been very, very good to Peninsula, and we're not going to leave our shareholders behind there. But there's a lot that goes into a listing, and to do it right and to develop the liquidity in the new market, there's a lot of considerations. We're not going to list just for the sake of listing. We're going to do this right.
That sounds good, Wayne. Okay, let's move on here on that and just talk about the equity valuation a bit here and investor sentiment. Of course, sector wide been beat up, but also investor sentiment in Peninsula has been pretty beat up for quite some time as well. I think you would agree with that, Wayne, and that obviously delivery on the ground is a very important component of turning that around. And then, the under promise over deliver approach always wins. It's very difficult to achieve, but it always wins. And let me ask you, as you guys move into more production and really getting things going at Lance, what actions will you be taking during this restart in production to reverse and prove up the capabilities of this company, its operations, and even the upside in the deposits?
You touched on sector sentiment and how strong it is. The tailwinds for nuclear, just incredible. But I look at how market performance of the peer group that I'm in, and what I see is that the largest U.S. uranium companies are the ones that aren't trying to achieve anything significant in the way of production. So it is a challenge for those of us who are moving towards production. And there's just a small handful of us, a small group that have a very real project teams, very capable project teams that are doing very substantial and concrete work towards generating long-term cash flow through production. Peninsula is one of those companies. We're investing the money that we get into the project, and we're turning a project around so that it'll be a long-term, successful uranium production project with 50 million pounds in the ground, and a present production capacity of 1 million, and an aspirational stage two of 2 million pounds per year. uh, we're just scratching the surface of the life of this project. So I encourage investors who are looking at the short term things, the 1 month, 2 month delays in the startup, to look at the long term. Look at what the company is doing to ensure that it's a viable company for the long term. Peninsula has contracts in place. It has resources and reserves in place. It has upside potential with the scale of the project, and um, you know, yes, we have our head down, focused on delivering a production project, which is a very difficult challenge. Like I said earlier, the market doesn't appreciate how hard it is to take a project from idle to production in the current environment. It's just a daily battle. But we're doing that battle with a very capable team, and long term, this company is going to deliver on aspects that other companies aren't even starting to endeavor on right now. I'm optimistic that valuations will reflect effort, that valuations will reflect performance, and that uranium production companies generating strong cash flows will be valued properly against companies that just hold resources and are a proxy on the price of uranium.
Wayne, well said, and definitely I agree with the point that you brought up twice about these things are very difficult to get done, very difficult. And, a lot of folks out there are still able to fake it, if you will, with respect to that. And eventually the tide's going to come out and we're going to find out who's swimming naked and who has completely told a story, nothing more, to their investors over this period of time, because we still haven't got to the point of show me and in this market. And unfortunately, we're going to get to that point, sadly, for some, positive
Well,
for others.
I look back, Andrew, at the uranium renaissance period, which really might have been 2005 to 2011, when Fukushima put a real damper on the uranium markets. But in that time frame, there was one private company operated a project in South Texas that we all know as Alta Mesa, and it turned out that private company prepared their project for production when the markets weren't saying it was time, but they had their own sources of funds, and they put their money into preparing the project for production. And when the markets turned around, they capitalized like nobody could. The secret, they were ready. When the market turned, they were ready. They were producer. It was magical for them. They generated great revenues during the upturn of the uranium price from 2005 to 2007. They were one of the few companies that were ramping up production and had readily available um, material that wasn't fully committed to the market. So they enjoyed a great opportunity. I see that happening now, but you have to be poised, ready immediately for production. When the market goes up, you've got to be able to take advantage of it.
Yep, fully agreed with that as well. Let's touch on another topic which we probably haven't touched on before, Wayne, but community work. Anything you'd like to highlight on this front that Peninsula is doing in the local community, continue to create a good workplace, assist the local community there? It's a rural area. and do work there that I think is important. And then if you want to expand to the state level, go ahead. But community work's important, and would love to hear your thoughts on what you guys are doing now. And then also, obviously, which some people tend to forget, that maybe the budget actually improves for some community work when you're actually producing positive free cash flow. And I think sometimes people put the cart before the horse thinking you've got to do all this stuff, and you should, but there is capital limitations to anything. I mean, all of this is fed by capital, and you can't have things like CSR and ESG without capital. And the capital comes from shareholders. No capital, there are no stakeholders. Talk about that for a moment, because I know this is important to you guys, and you guys have done some stuff there, but just talk a little bit about this, because
Mhm.
your work in Wyoming is obviously quite a bit different than someone's work, say, in Ecuador, for example. Go ahead.
Right. Well, Wyoming is a great place to work, and to live. I'm happy, to have been here in Wyoming for over 25 years now. But Peninsula, has from the get go been a company that's committed to being a responsible member of our local and community, and to be a contributing member of our larger society, our global communities. Peninsula participates in the advocacy for the uranium industry, but we also support local high school students, seniors, with scholarships. We've had a scholarship program that we're bringing students the opportunity to have a great college education at a low cost to them. We've been supporting college students for a very, very long time from our local community. As a consequence of the way we engage with the local community, coming to county commissioner meetings, going to local city council meetings, being open with the community. Peninsula has enjoyed a very high level of local community support. And it's also, probably comes from our health and safety record. Incredibly, we've gone over 5 years now without a lost time accident at our facility, even though we've maintained, a respectable size staff. And we're very active today in construction activities. And we have a terrific environmental record. The operations at our facility have held to the licensing commitments and the regulatory commitments that we've made. We run and do our work without violation of our environmental commitments. So we have a strong environmental record. The company is really, happy now that we're on the cusp of rolling out an inaugural EESG report, which is, employees, environment, social, and governance report. That's actually, coming out in the very near term, and it's a reflection. That report is a reflection of the good work that we do in the community, our attention to health, safety, and the environment, and to good corporate governance.
Well, look, we've spent a good amount of time here, and I want to be respectful of your time, and also my time, as we need to get on with our days on other issues. But one other item here, and then we'll wrap up. Mergers and acquisitions. Obviously, you've followed this and know that this is an important component of this market in various stages. Is there any interest on this front, and just your comments on this component that you'd like to make?
There is interest. Peninsula's naturally interested in growing and expanding our footprint beyond just the Lance project. And we've been actively engaged in pursuit of some expansion activities. I'm not going to, foreshadow specifically what those will be. I don't want the listeners to be disappointed. Don't take my words to mean that we're merging or acquiring immediately. But we've been actively engaged, and when the right opportunity comes, we won't be afraid to act. But I think that there's opportunities for Peninsula, with the talented team that we have, to really grow and expand beyond being a one project company. And that time is coming.
Well, let's leave it there for now. But before we go, potential investors who are listening in, Peninsula Energy has a market capitalization of about 182 million Australian. What do you say to investors about considering the company at this important stage?
We are at a very exciting stage for a company. We're beginning to, we're at the cusp of beginning to produce significant amounts of uranium with a new technology that we've proven through years of test work and preparation. We're a company that's committed to taking one step at a time, always de-risking and taking sensible small steps towards the finish line. But the last couple of years of investment into the project are about to pay their dividends. As we begin production and we start to report production to the market over the course of 2023 and then real stronger production results certainly in 2024. It's an exciting time for Peninsula. We've gone through the challenging times. We've met those challenges and we've risen up to them. We've done what we had to keep the company financially healthy, to honor our sales commitments throughout the years, and we sit in good stead with the utility customers. We sit in good stead in the uranium community, and I think that it's really time for investors to turn their attention to the quality story that Peninsula is, and to do your homework. But you'll see when you look at this, this is a quality team delivering a quality product for the market.
And Wayne, the best way for folks to contact the company?
Piece of cake. We have a website, www.pel.net.au. There's certainly a link there. If you want to contact the company, a simple email to us will be responded to, and that email address is info at pel.net.au. Those are the fastest, surest ways to contact the company for more information.
Wayne, thanks for the time. Appreciate it. Good update, and looking forward to chatting soon and continuing to follow the company.
Thank you, Andrew. It's been a pleasure being on with you today.